I want to welcome you all to a case study on third-party risk management. This case study will be done by Kaih Taylor, our third-party management administrator for AgFirst Farm Credit Bank. Now, Kaih has nearly a decade of experience in this arena, having previously worked as a business analyst for American Express, overseeing compliance, finance, analysis, vendor management, and contract management for all European, Middle Eastern, and African territories. She also served as a lead contract support for Norland Managed Services, now CBRE, overseeing the vendor management program for the London portfolio. Ms. Taylor holds a business analyst diploma and is also a business and administration level 3 certification. As a graduate of the United Kingdom's Institute of Leadership and Management Institution, she is certified through the Compliance Education Institute as a certified regulatory vendor program manager level 3 advanced. So Kaih has been sharing her third-party management stories with much of you, and I've heard a lot of wonderful stories, and now we're glad to have her come up here and share a little more detail of her experiences.
Thank you. So good morning, everybody. So as Matt alluded to, I want to share with you our journey on this road to implementing the third-party management application into our organization. But first, let me just introduce what I want to go through with you today. So this is the vision as to what I want to cover with you to really give you a flavor of the journey, our pitfalls, our learnings, and hopefully that will help you on your journeys if you haven't already embarked on them. And we're also going to share a bit about where we're going, because obviously this is a journey and it's a continuous improvement that we're going to go on. So I wanted to share what we're doing with you. So a bit about us. Who is AgFirst? So we are an agricultural association or bank. We're federated, and we provide our affiliated associations with funding, which means that they own us. And then they, therefore, provide funding to borrowers who are our farmers, maybe they're our rural homeowners, and therefore they own the associations. So the reason I'm explaining this is because our contract model, our organization model is very complex. Because our third parties, they don't just service us, they service our associations. And in some cases, they actually service our borrowers. So if you can think about how complex the level of contracting goes down, you can imagine that when we embarked on this journey, it was very complex as we started to map out what we actually wanted to deliver. So just a little bit more about AgFirst, as I alluded to. So just to give you a flavor of some of the services that we provide to our associations. So we cover the eastern border of the United States and Puerto Rico. We have 19 associations, and we provide them with all of these services. So everything that you see here, we, in most cases, will have a third party who is helping us deliver this to our customers, because our associations are our customers. So when you think about what we do as an organization, we are a bank, but we also provide a service. So it's crucial that our partners, which is what I call our third parties, our partners reflect the vision that we want to share with our customers. So just to give a little flavor as to where I started, I joined the organization and did a real big analysis as to what the needs were. So this was a board-level initiative that we got provided by our board. As you know, the industry right now in third-party management, you're seeing more and more of regulators really narrowing down on what we need to do for third-party management. I feel like every day I see something new. We see a new requirement, new conversations, which is all good because it's all helping us to mitigate our risks. But the boards really are, you're starting to see more and more boards pushing down to say, what do we need to do? Because ultimately they're responsible. So they asked us to really deliver a program that helps us deliver a board objective of mitigating our risk for the organization. We wanted a consolidated third-party management program. I'm sure you guys have all got the same predicament where you have an AP system, maybe have a separate BCP management system, then you've got a separate risk system. But from third-party management, we want one tool that collates all of that into one place. If I am looking at a vendor, I want to see within my profile everything to do with that vendor. So it's really crucial for our users that can go to one place and they can have access to all of the information that they could possibly need. So the overall bird's eye view, that's all to do with our senior management. They want to see the overview. They don't want the detail. They want to go in, see what they need to see, and get out. So it's not just about delivering the, from what I call the bottom-up delivery. We also need to think about the top-down and actually have an overview for all of our stakeholders across the organization. We needed to standardize our processes, make some efficiencies by automating our processes, and where we can actually start consolidating our contracts, because again, these are the benefits that third-party management bring. You can start stratifying your contracts and rationalizing your third-party database so that you can actually receive cost savings. You can actually start using that information to start negotiating better, looking at the performance. You can now really drive some cost savings by really good metrics. And one of the other things that obviously I'm sure we've heard a lot about over the last couple of days is reporting. So that was really crucial for us as well. But we had challenges. So where we were in our program before I came into the organization, there was fragmentation across the several different business units. They were working in silos, which is not unknown for those who are working in this realm. And what we needed to do was make sure that we got rid of the fragmentation and we started to work together as one entity. We got the increase in third-party technology, which again, coming from the finance industry, this is something that we're seeing more and more. And this means that, again, the complexity of our relationships, it's growing. The data that we needed in order for us to step into this realm was not readily available. So that meant that we had to go out and we had to sit with all of the business users to gather that information. And that, again, is not an easy task. We had to close the gaps where there were processes that were missing. And then again, as I gave an example, we have very complex contractual agreements. So just looking at the challenges versus the needs, you can see from the start, it wasn't a smooth sailing journey. So AgFirst, we are regulated by the Farm Credit Administration. We have a system across the whole of the United States, although we only work on the eastern border. And we call that the Farm Credit System, not to confuse anybody. I'm not going to go into detail about that. But Farm Credit Administration has got a very narrow guideline around third-party management. Again, our history is in services and technology, so that is where they centered on. So when you think about the wider third-party management, we then turned to the other regulations in order to get a guideline as to where we needed to start. And that was just because we needed to think about the wider organization and mitigate the risk for not only our users, our stakeholders, and our customers, as in the associations. So it was crucial for us to look at what was out there and really look at where do we want to start, what do we want to deliver. So we looked at everything that had anything to do with third-party management and took that into account. So this is an interesting one. So why? And I love having this conversation with certain stakeholders, especially my information security officer. Cyber is really big right now. But for us, it's governed by FCA. The assumption is that we are not all of these things are not applicable to us. And it's a really great conversation piece when I have to explain, Yes, we are. We're still foul to any of these regulations because although we're governed by FCA, our vendors may not be. So the service that they are providing us means that we are open to all of these things. And it's a really interesting concept because people don't really think about that. They think about, this is my regulator, this is all I have to do as a bare minimum. And what I'm trying to, again, educate my team and my organization on is that the bare minimum is not going to mitigate the risk that we are open to. So this is something that I have introduced, and there are other things that you can also have, that you can get your CAMEL ratings lowered. There's also a big piece right now around needing to know the regulations for the states that you operate in, not just the ones that you are located in. So there's a whole piece around that as well, which is very complex, especially when you start talking about not just cross-state, but you're talking about cross-border. So you're talking about the EU, GDPR, and all of that realm as well. So it does get very, very complex. But for us, we started to look at what are we mitigating against? And this was a great tool for us to really start looking at what are we open to. It's not moving. There we go. So again, so what did we want to do? So we started looking at what was the governance model that we needed to develop as phase one. So again, we didn't want to going with best practice, taking off the SIG questionnaires, and jumping in and basically hitting all of our end users with those. What we wanted to do is really look at a realistic stance of taking phase one. What are the basic elements that we want to implement? So we targeted onboarding and standardizing that process, standardizing the monitoring of those vendors, looking at the performance scorecards, again, generating standard questions across the business for those sectors, because that, again, it was inconsistent. So we now need to be judging everybody to the same statistics. Looking at issues management, I know we've been talking about that, but around third parties, it's crucial for us to be looking at where we need to be doing actions, where we need to be following up on performance issues, because actually we can actually avoid disruptions to services. So this is something that we're pushing right now because this is big for us. If we can stop a failure from happening, let's do that. If it could be the smallest, but it's still going to be worth it in the end. And then the other thing that we are really excited about is the risk intelligence. So it's actually making it more efficient for us to do our ongoing monitoring. So I have various different platforms that I use in order for me to stay abreast of my third-party management knowledge. Obviously, we use the MSIGs within MetricStream. I'm actually part of some of the specialist third-party management groups. The Certified Vendor Compliance Management is actually one of those, which are a really good tool because, again, it's global, so they give us we can really have some great conversation pieces. White papers are great as well. Again, looking at those people who are doing the studies, giving us the metrics so that we can improve continuously. And I also join webinars quite a lot as well. So challenges, and again, just wanted to expand a little bit on the challenges from our program. So volume. So we're not just talking about vendors, we're talking about relationships. That's where we do the assessment. So we're doing it at the relationship level, which when you have maybe 1,500 vendors, you may have 20,000 relationships. So when you start looking at volume, you then have to think about how quickly can I actually develop this program. The expertise that was available. I am the only person in my third-party management team in the organization, so I actually reach upon my other counterparts in compliance, legal, information security to help me build out their specialist areas. So although I do not have specialist people in my team, I make the rest of my stakeholders my team. And then the culture thing is always a big thing. So for us in AgFirst, we have very big tenured people. So most of our organization, up to maybe 5 to 6 years ago, had been there for 15 to 35 years. So when you're thinking about adopting a new program and trying to implement change, it was a big challenge. So when we started to think about how we can get the buy-in, it was crucial. So that was a major challenge for us outside of standardizing processes, trying to extract tacit knowledge, which is just sometimes impossible. So you have to really get creative in trying to just extract the little pieces of information to just make the program so much better. But it's always going to help us make our program better. The system itself, again, I explained a little bit about the multiple systems we had. So it was trying to, again, take the information out of the systems and put it into a template that we could actually embark on this journey for M7. Because, again, we had multiple systems, and the information in those systems were inconsistent. So, again, we had to harmonize those in order for us to take that step into the journey. So this is the model that I use for my solution. And across the top, you'll see the areas that I had mentioned earlier about the different pieces of the program that I wanted to introduce. And down here are the dimensions of risk. And I don't know if anybody has done anything about the dimensions of risk. It's my favorite area right now. But the main thing that I drive across my organization is that this is not a one-time effort. And any time during the whole life cycle of third-party management, you can have a particular item against one of those risks occur. And therefore, we have to address it. We have to completely do a new assessment, review how that is impacting the relationship, and again, making sure that if we have a risk from the risk intelligence that then makes the risk rating high, we then go back to the due diligence. We relaunch and say, what is the new risk and the new control measures that we need to do with this relationship? So it's really crucial for us to understand that this is a constant process. The good thing about a lot of these dimensions of risk is the risk intelligence within the MetricStream system covers a lot of this. When you subscribe, you get automated alerts, and you can actually just review the changes that are happening with your vendor rather than having to extract that. So it really is a big help. We subscribe and get that on a weekly basis. So every Monday morning, I'm going in and looking at what my new notifications are. But it's a really great conversation piece at the beginning of the week to say, what do we need to do? Is there anything that we need to do and look at? And I get my stakeholders together and start doing that review. So again, the solution, we're looking for integrated, consistent, efficient, and risk-averse all the time whenever we're doing anything within third-party management. And at the bottom is a little diagram, and I don't know if you can see that clearly from where you are, but it's the OCC life cycle. And I put it here to really demonstrate that what I'm doing with my program delivers the OCC life cycle, although it is in a different way. And I'll explain why that's there in this next slide, which is just that there is no one-size-fits-all. So we created our program to match our organization. And I think that's important because there are various guidelines and best practices out there, and you really have to do the assessment to say, does this work for me? If it doesn't, then you need to adapt it so that it does work for you. And I think that's really crucial for third-party management because every vendor's different, every relationship's different. And we are having a conversation just now about the risk assessment and then saying, okay, I'm going to do a risk assessment and it's critical, but then my second relationship is not critical. So I can't have the same rating applying to the various relationships. I have to look at this at the relationship level and look at the risks associated with that relationship. So we had to build a model that allowed us to do that. Metrics is a big one for us. Where we started, the metrics were driving the wrong outcome. The vendors were doing the bare minimum just to deliver a score. Now we have basically re-engineered the whole scorecarding process. They are having to they're having to perform to the contracts which they have signed and agreed to. So now I'm re-educating our people to say, okay, what is it they're supposed to be providing us? And now we're judging them to what we're supposed to be receiving rather than just the bare minimum of what they're delivering. So metrics is really important to make sure that you're getting the right outcome because you could actually get the opposite of what you're trying to get. And again, the key thing for us is communication. I'm always up and down around my building. I was having a conversation yesterday about the fact I think I spend more time walking around my building than sitting at my desk. And if I do come to my desk, I've usually got someone sitting there waiting for me because they know where I sit now, which is great. But the main thing is that the communicating is really starting to generate some really good energy in the organization. And now I'm not having to extract information out of my team. They're really coming to me now and going, hey, I saw this, what do I need to do? And it's a great conversation piece because before, if they didn't know, they just would ignore it because what they don't know, they just put it on the back burner and don't think about it. Now they really come into the table and going, okay, I have this risk, I don't know what to do about it, what do you recommend? And then we sit down and work through that and we record it within MetricStream. So again, we have that audit trail. So I know they've gone through a lot, and it sounds like we were really geared up, and it was great, but we were not. So, like I said, I was hired, so they had to hire me to develop this program. We had to assess and put new procedures, policies, and directives in place. There was not a third-party directive in place in the organization. And then the biggest piece was stratifying the portfolio. We started with 10,000 vendors. I managed to get that down to 2,600, and then just before we went live, we got that down to 911. And that was doing things like looking at expired contracts, looking at duplications and consolidating, looking at where we had the same vendor for multiple addresses, and actually we could just add this into our MSA agreement and actually have a child rather than having a new agreement and having another vendor. So there was a really big stratification of the vendor portfolio that we had to do in order for us to take a step in, because if I gave a system to my users with 10,000 vendors to manage, it wasn't going to be successful. So we spent maybe 4 months going through and harmonizing all of that before we even started to do any of the requirements. So when you start thinking about readiness and what you need to do in order to deliver your program, I put my hands up and was like, we're not ready. We just need to park this for a second and get ready to do this, because if we started building out the program at that time, we would have built out something that wasn't adequate for what we were trying to achieve as an end goal. And again, just a little bit more about the processes, and I know we covered this a minute ago, but again, established system users, which was big. We needed to create approval authorities. We needed to create the escalation levels. We needed to create user groups. So not everybody has access to this system. The only people who have access are those who have authority in our organization to either sign an invoice, therefore they can own a relationship. We have only a few individuals who can actually sign contracts. And then we have some SMEs. So we have small groups that are easily maintainable that we can actually have working sessions with and, again, collaborate and continue to drive the system forward. So I'm going to go through and give you a little flavor of our journey. So in 2018, we implemented the out-of-the-box third-party management system. And as I said, we just take the first step into this realm. We didn't want to go too far. We just wanted to take a quick step into making sure the users adopted and bought into what we were trying to do. This year, we're actually implementing the contract management workflow. That was a big gap for us. We found and discovered that people although they are supposed to be going through procurement for their contracts, they were not doing that. So we're creating a process that the only channel that you can actually start a new contract, SOW, PO, renewal, or maybe we need to do a termination, you have to go into the system and start the process within the application. And this is big for us because we need to make sure that we can get everybody using the staying consistent process. So this is something that we are excited for because right now it's completely disjointed and I have paper come on my desk all the time. I'm like, where have these vendors come from? And we're just, again, trying to tidy that up and get some consistency. We're also implementing Tableau. We're connecting that to the MetricStream system so that we can do some really good analytic reporting. We did weigh up whether we needed to do that inside of M7 or do that outside of M7, and we discovered that we're talking about audit requirements. The audit could turn up tomorrow, the regulator could turn up tomorrow and ask us for a piece of information. We do not have weeks in order for us to create these reports. So actually, Tableau gives us the ability to quickly drill down and provide them the information they need with a one-time effort rather than us having to consistently be trying to recreate reports. In 2020, we are going to be implementing BitSight, the cybersecurity assessment tool, and that is going to integrate within TPM. And we're actually doing a lot more about risk ratings and heat matrices for the dimensions of risk that is actually going to associate with that BitSight score. We're actually aiming to implement the MetricStream mobile app. This, again, is all about user adoption. Now, they don't have to be at their desk in order to do these reviews. They don't have to be at their desk in order to create a new relationship. They can do it wherever they are. Maybe we have somebody who's approving a questionnaire. They can do that wherever they are. So again, it's all about making the user experience better. The other thing that we're doing is within the audit module, there is a great there's a great section about vendor audits. Now, that is another piece of our program that we're going to be building out. Instead of us having to create a custom, which is, you do not want to do anything custom, instead of trying to create a customized feature within TPM, we're actually going to utilize what's already available in the audit management tool. This means that we can now, again, standardize the site audits, we can do some metrics and reporting, and more importantly for us is that we can actually start trending, because what we want to do is actually start linking all of these things back to the vendor. So now, if they're doing site audits, they're discovering things when they're on site that then leads to a failure, we can now link that into issues management and start using some automation to start generating the kind of tasks that we should be doing when we find certain actions. So we're always looking forward and we're always thinking about how we can make the user experience better. And then in 2021, we're starting to look at other elements of vendor management, and they're just things like financial viability assessments is a good example. We have to do those of our vendors, and we're currently using an external tool. Now, if we can figure out a way that we can actually not only either do it within the tool or pull the information into the tool and actually make the user experience much better, this, again, is giving us a benefit. So, again, if instead of my users having to manually go in and upload or attach, now we want to actually, maybe we're going to upload this as a template, and I'm going to generate these results, and it's going to actually pull into the risk assessment. So I'm thinking we're looking long-term about building out our program, and we're trying to make sure that from a strategic or an end-user experience, this is going to make it more efficient for us to identify our risks. So we rolled out, like I said, in a very organized way. We had a dedicated team of 5 people who helped develop, test, write, and collate a lot of the information. We did very detailed requirements mapping, and that was important because, like I said, we have various associations. Now, whilst our associations are not using this tool right now, we have built it out that if they do choose to use it in the future, they could easily do that. And again, we had regular meetings, we did deep dive UAT, which was crucial for us, and making sure that the system was ready to be shown to our end users. So instead of just doing simple UAT testing, we actually did every single step in our use cases, which was important for us to make sure that everything worked the way it was supposed to, the scores were generating the way that they were supposed to, and we even found things in the system that we didn't want our users to do. So a good example was in the questionnaires. If you create an issue within the questionnaire, you can't then close the questionnaire to complete the risk assessment. We didn't want our users to do that because that meant that we couldn't get a risk rating. So again, we developed all of our training material And I do have some with me so that if anybody wanted to have a look at any of those, you can. But we developed all of our processes, again, to ensure that the end user experience was as seamless as possible. So the system has capabilities that we did not share with our end users. And it wasn't because we wanted to limit what they were doing. We want to make their experience better. So I think there were just things that we just, again, harmonized and made sure that the message that we presented to them was as consistent as possible. Another thing that was crucial for us was how we actually sold it to our end users. So we did, again, subject matter area training. We did the executives first, which was a lot of fun. And then we started working our way down. And what we did was create training material, quick reference guides. We actually did infographics, so all of my executives have a little card which tells them the 3 steps that they need to do in the system. But it was just thinking about who is my audience, how much time do they have, and what is their type of learning. So we did face-to-face learning in a group, and we actually have, we're kind of lucky we have a room with computers in it, so actually we were doing training together on the live system in UAT, not on the live, but on the system. And then we actually did one-on-one sessions with each of them so that if anybody had any questions or anything that they didn't want to say in front of the group, they had a chance to really open up with just me in the room, and they did. They didn't hold back, which was great. And then we also have the training guides, and we're actually about to create in our career cafe system, a third-party management training module. So all of the training elements of my user guide will be in there, quick 2 to 3 minutes videos that walks them through the steps, and they can just quickly go in, just select the one that they want, and it's just like I'm there with them. So again, we're just thinking about all the elements of learning that they possibly could be open to, and just the main thing is just being available, as I said. They come to me all the time and ask me how to do things, but I think the main thing was just making it seamless and easy. So that is not where it ended. The life after the implementation, we consistently communicate with them. We have dedicated monthly newsletters where we talk about different elements of third-party management that goes out every month. We have working groups with our stakeholders. We have lunch and learn sessions with all of our users where they can ask questions. I usually ask, we've got one that's coming up in a couple of weeks, and I ask them to tell me, suggest to me what you would like to talk about. So rather than me telling them more information and more information and more information, let me help answer the questions that you have. And really, it's just to eradicate that line between me and them. Although I am the second line, I really want to get into their minds and understand what it is they want, because I think that's crucial into managing the balance between our strategic objective and our users who are actually doing the delivery. So it's really important for us to have that continuous improvement, continuous communication, and continue to develop in the right ways, taking both into account. So our system is supporting 90 users today. And again, this is a very small group that we carved out of our organization to, again, drive that standardization. We have very clear assessment processes in the system today. Part of our phase 2 is actually to enhance those, and we actually have a schedule to enhance them again next year. We're actually embarking on putting the SOC 2 certifications in the system this year too. So we're always looking at what we can do to not only centralize, make it more efficient, and actually just make it easier for our end users to do what they have to do from a due diligence and monitoring point of view. Another part of what we're doing around third-party management is fourth parties. We have some very core systems where we have some really critical fourth parties, and I'm working with my users to actually help them, again, centralize the audit information, but look at what their third parties have in place. So again, we're always looking at how we can benefit them, and it could be something that's really small to me, which is massive to them. So we're always looking at making it quicker, strengthening our controls over third-party management, and actually just continuously trying to improve, because as we know, the industry is growing and we need to make sure that the program keeps up speed with how that is growing, and that adoption of those changes are very crucial. So again, this is just a little small overview to show the before and after. So again, we had a very fragmented risk model over the organization. We're very siloed. Again, risk rating was a big one. My criticality in IT was completely different to my criticality in lending. And then that was completely different to my criticality in information security. So again, harmonizing and actually saying what is critical. And I actually did a really great example in my SMC meeting, which everybody laughed with me for, which is great. But it was actually to say, I took our key vendors and said to them, is this a critical vendor? And they were like, no. And I said, okay. So an example is our bank. If our bank went bust tomorrow, how would we pay our bills? How would we pay our employees? And suddenly it dawned on them, they're critical, but they weren't on the critical list. So that was a really big exercise, just trying to use real-life examples to get them to think about what is critical, and separating the criticality to the risk rating, which is, again, really important. So again, afterwards, we're going to get some consistency across our portfolio, and I think the main thing is that no matter where I go in my organization, I'm going to know that they're doing the right process, they're using the same terms, we're looking at the same things, and we have the same end goal no matter what department you're going to. So for us, it has been a journey, it isn't over, and so long as you have the support and the buy-in, you're going to have a challenge, but the challenge is going to be manageable. And I think that was the key for me, which is we didn't give up, we kept fighting through, and the delivery has just benefited us tenfold. So I think that was it, I think. Yes. So I would open it up to any questions, if anyone has any questions for me.
1,000, but I mean, I can't think of, I don't know where to start because there's so many.
Were you integrating this with any existing contract lifecycle management platform, or this was it? Okay.
We had absolutely no vendor management system process in the organization. Now, we had risk management going on in the organization, but it wasn't third-party management. So even if you looked at scorecarding, what they were doing was doing the top 5 vendors, and the top 5 vendors what they were looking at wasn't even performance. It was just simply, what did we spend? How did they rate on the RFP? Were they 10% below average? So what they were looking at wasn't real risk management. So again, we didn't just buy the solution, it was actually creating the program so that we could actually use the solution. Yeah. Does that answer your question? Good, thank you. Anybody else?
Thanks so much, Kaih. It was absolutely a wonderful presentation. Do you think maybe there was almost an advantage in the fact that you didn't have a program because that allowed you to come in and really build something? Do you have any advice for those of us who have sort of ad hoc programs here and there that we're trying to corral into a unified program?
So in my organization now, we didn't have a program. In my previous organization, we did. And the platform that we were using, it was an out-of-the-box system, but it did everything. And where you didn't have the processes, you fundamentally couldn't use like a whole section of the system until you did. So what we had to do was actually look at I had to say pause. That was the first thing. I had to say pause with our management and say, okay, we are trying to run a marathon and get to the finish line so that we can actually use a particular part of the system. And I said to them, instead of us doing that, let's look at the basics for each of these sections so that we could at least just use the basic elements of each one, and then we have a plan in how we're going to continuously build out these sections. Maybe we're going to do a 6-month rolling plan, and we're going to launch more and more into the program every 6 months. The 6 months actually became a year, but what we actually achieved in the year was just phenomenal, because we had to actually go to each of our countries, because this is when I was working across the EMEA, so I had 7 different countries and 15 different buildings, but we had to go out and actually look at what each of those countries were doing, looking at the regulations for each of those countries, and looking at where we could harmonize across the portfolio to make it consistent, which was really tricky at first because, as you know, in different countries, everyone has their own mindset. They want to do the minimum. They don't want to do the maximum. And where you have one country that requires more, it's very difficult to convince them to do more. So we really said, okay, what is the minimum point across the whole of these countries? And I think about that in AgFirst for our departments. What's the minimum I can do across all of my departments? And that's my starting point. And I think that really helped to unburden the organization of trying to actually do everything and be compliant. I think there is that real confusion over being compliant and getting to compliant. And I think so long as you can show your journey and you can explain how you're getting there and what you're doing to get there and what you need funding-wise to get there, from what I have experienced with our regulators, they are open to that. So long as you know what your journey is and you can explain it and demonstrate it, I've not ever had any pushback on us not fully achieving compliance yet.
Any other? There you go.
That's a great journey, and I think especially I'm very excited on the change management, the way it was handled. So my question, actually I have 2 questions on the change management. So the first one was, how much of it is the tool really actually drive the change management, and how much of it is in terms of the internal processes and the change that you have to drive on your side? And the second one is, what are the strategies that you have followed to pull in executives to use the tool? I think you called out some small cards, but if you could elaborate on that.
So the funny thing, so I give you inside information as to how I got my buy-in, which was great. It was a really fun exercise I did. I actually made them watch. There is a video, and I don't know if anyone's ever seen this. There's a video, and you can Google it on YouTube. It's a attention video, and basically what it does, it says, please count how many times. There's 2 teams, 2 basketball teams, and it says, please count how many times the team in white pass the ball to each other. So I did this to everybody in my organization, and they were all sitting there watching this video, and they were like, okay, it's 13. And I said, you're right. And I said, and then the screen changes, and it says, did you see the dancing bear? And nobody in the room saw the dancing bear, because they were all concentrating on these 2 teams passing the ball. And they were like, no, there was no dancing bear. And then the video replays, and it's like, oh, I didn't see that. And it was that we had gone through, in one of the sessions, we had a 2-hour session talking about change, talking about where we needed to go to, the culture change and everything else. And the moment it dawned on them that, you know what, I'm not doing it, was the video. And it was crazy for me that I even had my change management manager in the room, and she herself was like, I didn't see it. And it was that moment of I like to use examples outside of my what I call my circle, to kind of get them to understand what I see as the journey. And it was that moment for me that they suddenly was like, I need to do this. And suddenly the room atmosphere changed. It was that moment in time, the room just instantly changed, and everybody all of a sudden was like, how do we do this? How do we now get on this journey? So for me, it wasn't even about just the looking at the culture change and looking at what we need to do from process sort of thing. It was actually the mindset, because I think you can put whatever processes you want in place. Unless people are on board for your journey, you're going to have that battle. So that was just how I managed to kind of get over that hurdle and get them to come over to my thinking of, you know, taking this journey. It's an amazing video, and if anyone ever wants to go online and have a look at it, it's a really great tool to kind of just check and see, are we doing it? And I had a few other examples, but from a group point of view, we really had to, and again, not to go across to some of the other things we're doing, because we're doing a bit about the enterprise and operational side of things as well, but again, there was a gap. So we had to really look at not just what do I need a third-party management. Third-party management touches so many different elements of the organization. So whatever mapping that we had to create from an organizational chart for our application, it had to work for all of those other pieces. So as we implement the enterprise module, or when we do the disaster recovery or the operational, that mapping still has to work. So we really had to look at what was it that we were trying to achieve, who needed to be in those groups, and fundamentally saying no, which is the big one, because once people knew what it was that we were doing, everybody wanted access. And we had to say, you're not getting access because, and given them that reason. So we actually have now a approval authority list, which we didn't have before, but that really is a list of each of the cost centers and who has approval authority and what for. And that feeds through now not just for my system, we use it for our finance system, we use it now for our contractual compliance. So again, harmonizing that was key. And so long as you have those groups and it works across the organization, the change is easier. Is that okay?
Thank you.
I'm sorry, I can't, you're like right in the light, I can't see you.
Kaih, this is Kaih back here at Susan. You know, one of the points that was raised earlier in the front about how do you get everybody moving in the right direction. I know that when we worked with you, there was this concept of establishing, you know, what does basic look like? What does rationalized look like? What does optimized look like? And in each of those categories, there were defined attributes for basic, rationalized, and optimized. And then that really created a bit of the journey, right, for you to determine where you're going to go. Can you just talk about how you thought that through?
And just to your point, I think the other thing that we also did was we also looked at the maturity model and said, what things do we not want to be rationalized on? Because I think you can also go too far. So we were looking, for instance, we looked at our policies and said, do we want to rationalize those? No, we didn't. We just wanted to simply get them into a centralized repository so that we could monitor those, give access, and start doing some attestations. But again, for our journey in TPM, we took each element and not only looked at where we are, which is important, where are you now? And doing a real honest view as to where you are now, and looking at where do I want to be? And not where do you want to be at the end goal, where do I want to be at the end of my project, which is what we did our assessment on. And I think that's crucial because you can end up trying to aim for rationalized and failing. Because if you do not have the processes in place, the likelihood is you're not going to go from basic to optimize, I'm sorry. You may be able to achieve rationalize, but you're not going to get to optimize. So we really had to take a realistic view and say, we do not have that, and the likelihood we're going to go from having nothing to really getting an optimized system is unrealistic. So we really took each of those elements and assessed each critical component and said, okay, this is where we are, we can achieve optimize. This is where we are, we're only going to do basic. And taking each of those elements, and I think I still have that, and I can share that with anybody I can send that to anybody after the session. But it was really a great tool to actually establish what do we want to do, what do we want to deliver. And I think especially for my management, it was a good tool to, again, get them to really concentrate on what can we actually do, because the end goal can be as far away as it wants to be, but you have to think about what you can realistically do today.
Kai, thank you so much. This is breaking my heart, but we are
I know.
over time. So, wonderful session, amazing job. I'm honored to work with you. Kai's here for the rest of the day, so if you want to follow up with any other questions, thank you, Kai.
Thank you.
Brilliant.